Hi, this is Zach, Compound Interest Stock Guy, with you today on Saturday, December 22nd, 2018, getting close to the end of the year. Yeah, so this video, I want to talk about why it's tough to become a trader when you're learning. And also, if you like this video, please give me a like and subscribe for more entertainment and information on the stock market. Anyways, let's get into this. So, why it's hard to learn how to trade and invest in your early years of investing and trading. I'll tell you why. Because there's so much people telling you to buy A and B stock, to tell you to buy this and that, and all this stuff like that, that it's hard to really wrap your head around where to buy a stock, where to sell a stock, and all those kind of nuances that you don't really learn until things go bad, that you should have maybe taken your time and to get into a position. There's also things such as charts, and there's all these indicators and all these other things that make it hard to learn the stock market if you're learning. So that's why you really need to have as many tools in your toolbox so you can be an advanced trader and investor eventually. And what I'm learning to do now that the market is kind of going down, is I intend to do some put options on some stocks if they keep going down. Some NASDAQ stocks, short-term puts I plan on doing, just to, because a lot of my stocks, I'm all based on them going up, and that's making me no money right now because the market keeps going down. And another thing that early investors do not do is they do not set aside cash for when the market goes down, and then it hurts them. And I know for myself, I didn't do that, and that's affecting my my progress in the market, and I'm learning. Yeah, so I mean, there's put options that you can do. People were making tons of money in the last week or two on put options in companies such as Facebook, Johnson & Johnson, Microsoft, Apple, Nvidia. There was tons of places where you can do that, and that's something that you have to look at the chart and think that it's going to go down, and instead of going up, and that's where you can make your money. And there's also ways that you can do it on certain ETFs, such as HOD, and that's for oil going down. And there's also for gold going down. There's other ETFs on Horizon, but I'm not going to get too much into detail about that. But there is options that you don't even need to have a margin account to be bearish on stocks and ETFs going down. So yeah, but if you want to do puts or calls or short stocks, you do need to have a margin account with your brokerage account, and that'll let you be bearish about the prospects of the stock going down. And then when you're doing that, if I don't do shorts, but I intend to do put options, and that's where I'm gonna put, say, like, they're selling for 75 cents per share for one lot would be like $75 for the 100 shares, and that'll expect, like, at a certain price, say it's like at $77, which Apple was at, like, just for example. That's not the reality of the price, but and then if it goes down to, say, like 74 or 73, and you base it on $77, then you're gonna make the difference in the stock going down. So then you can sell those for like $3 or $4, and you only put in like 75 cents maybe. So you can 4 times your money in a short time if you're right on your put options. So when in a down market, that is something that's advantageous, and a lot of new investors do not do that. They don't have experience, or it's kind of scary to them. But there's a lot of different ways that people can make money in the market when the stock market's going down. And things such as, like, staying in cash and doing put options will make you money when the stock market's going down. And then when the market goes completely down, then you can buy those stocks that you really love and you think that they're great, and you can buy them when they hit like 5-year lows, and then you believe that the company's going to be strong in the future, and then it'll go like maybe 2 or 3 or 4 times higher when it hits its like 5-year lows, and you'll make a ton of money on that. So there's always different options where you can make money, but as a new investor it becomes tough because you don't have all the experience, because for the last couple of years it's just been a bullish market where the stock like the S&P 500 continuously keeps going down, and then in 2018 the majority of the time it was just trading sideways, and then it hit like a high back in September and October, and then now it's just like being completely like decimated down to, from the highs in October about like 2,900 now down to about 2,440. So it's lost a lot of its share in the market, and that's like all based on the billions of dollars that are in the S&P 500 index. So it's losing money in that, and that's because the stocks keep going down. So yeah, I mean, there's all these different ways that that you can make money when the stock market does go down, but as a new investor, you don't have all the skills, and that's why it takes a while to learn different strategies in different places and learning to adapt, because if you don't adapt, then you're not going to reap the same type of rewards, because you can have one scenario, like one type of strategy that'll work amazing in a bull market, but then once it changes to a sideways market or a bear market, you just can't make the same amount of money. So it's things that you can learn along the way. And yeah, I mean, I plan on doing more types of videos to get into the strategies, to learn more about different ways to make money in the market. And I hope you enjoy this video. Give me a like or give me a dislike, and subscribe for future entertainment. And this is Compound Interest Stock Guy talking to you guys today. I hope you enjoyed. Peace.